Good morning traders, my name is Grega Horvat and welcome to a week ahead video. Today I will walk you through some charts. Blake went on the vacation, so let's dig into some Elliott wave patterns. So euro dollar, as you know, found some support, very important support at this 1.1550 level, which was a swing low from November 2017, and also trendline support connected from 2017 lows. So I think this is a very significant. Now I'm still not sure if we are going back to the highs, if this was just a deep corrective wave 4 since it stopped at the former wave 4, which is very common, or are we in the middle of a bearish impulse here and we will see much weaker euro. So for the longer term, I'm not really sure what is going on. I don't want to predict markets too far into the future, but I'm more a trader, so definitely I want to look or anticipate what may happen in the next week or two. Okay, so with that in mind, despite both different wave counts on the longer term scale, what I think it may happen is that we will see higher recovery on euro dollar. The first one says that we can even see a 5-wave rise if we consider that this can be a deep retracement of a wave 4. However, I do not like the personality of this wave 4. Okay, but there is still a chance for a bounce. Okay, and even this wave count, which is extremely bearish, suggests a temporary recovery. Even if this is going to be just a correction, it's still wave 4 has room to move even higher. So for the short term, I think that euro dollar found some base and that we will see higher prices next week. The next thing is that on the 4-hour chart here, as you can see, pair is already threatening this trendline resistance, which can send prices to the upside. Also, this first leg was quite impulsive. I have also 1-hour chart here. You can see 5 waves up, and now we are in a corrective retracement. So actually euro dollar is doing quite well despite very good non-farm payrolls reports. So I think that euro dollar could really find a support here and that we may see a push, let's say, back into this previous wave 4 region. Okay, so even if we are just in a corrective bounce here and that euro dollar is going to see much lower prices from a long-term perspective, I still think that there is chance to see higher prices and then turn to the downside. Okay, so for now, I think that next week we may see stronger euro. Also, if we take a look on cable, here we can see very strong decline. As you know, pound has been one of the weakest recently. We have seen very strong decline here, but clearly in 5 waves. And we know that after every 5 waves, market can make a 3-wave retracement. So we have seen a very nice turn up here from these fib levels. So ideally, market accomplished a 5-wave decline, and we are now going to see higher prices into wave 2 pullback. So I think that this pullback can be only temporary here, because we definitely have to respect what the market is doing on the longer time frame charts, where I see a very decisive break below this trendline support, which was actually an evidence that this complex corrective recovery is finished. Okay, so watch out for pullbacks and then even more weakness. Now, cable sometimes can be very strong, so be aware of very sharp and deep pullbacks as well. But in such case, watch out for this broken trend line that could turn into very nice resistance if tested. This would come in around 1.4 level, is also very important psychological level, but before that you have this 1.3650 area, which was this swing high back from September 2017 when we were still in uptrend. Okay, so in euro dollar and cable on both, I expect more upside, but still it can be only a corrective movement higher here on those pairs. Now let's take a look on the Aussie dollar. Now Aussie dollar is actually, from my point of view, is bearish. Why? Because big trend, as you can see here, it was still down from 2012 or even more back, and since 2016 we have seen higher highs and higher swing lows, but really nothing significant here. This is not an impulsive rise. This looks like a very good healthy correction actually, because we have a lot of evidences that this is a correction because of overlapping substructures. Okay, so I think this can be some very important flag here, which in fact can send prices extremely sharply to the downside if we consider that market recently broke beneath this trend line support if you connect up from 2016 lows. Okay, so I think that we can see more weakness here, and that ideally this was, from an Elliott wave perspective, this was wave 4, possibly with a ending diagonal formation here in wave C, which, you know, it's a very powerful reversal pattern. So actually this can cause a very strong drop into a fifth wave. Here on the daily chart, this is that one, that extended trend line that I talked about. We are ticking higher at the moment, so watch out for this resistance around 0.7640 or 50, around there, where this upside can be limited next week. Okay. Also on this technical chart, what I see is that we are approaching this 50% moving average here, which can act as a resistance as well. And also I see RSI trading around 50 as well. So when we are in a downtrend, you definitely see after a pullback, you want to see this RSI to hold as a resistance. Okay. So Aussie dollar could see more upside, but definitely this structure is looking some kind of a corrective on a short-term basis. So that's why I expect more weakness after this consolidation finished. Now let's take a look on dollar Swiss. Now dollar Swiss is, if you want to be prepared for potential more dollar gains, then watch out for dollar Swiss, because this one made a very deep pullback, very healthy one, but clearly with evidences of a corrective setback. So we can see plenty of overlaps here within this trading channel. So it's a counter trend movement, I believe, which can still see more weakness, because here on this hourly chart you can see that the rise was in three waves. So I think there's still more downside coming here for a wave 4, maybe another retest of 38.2% retracement. But the idea is that sooner or later market could form a bottom here. So I will be watching this pair very closely next week, because we are also on a daily chart here. Notice that we are also at this trend line support. So this was a channel, okay, the upper side of this channel, which was broken quite decisively here, and now we are in a pullback. So this can be a very nice region for a potential turn to the upside, and even well above parity. Okay, so I'm expecting more upside on dollar Swiss. So when I will be able to recognize that euro dollar maybe completed only a temporary corrective bounce, same with cable, then dollar Swiss could be probably very interesting to the upside, because we already see evidences of a corrective movement here. Okay, also on the daily chart, again, we have seen a move very nicely close to 50-period moving average, while the RSI is sitting on a 50 line as well. Okay, now let's take a look on crude oil. Now crude oil turned aggressively to the downside. We have been looking for this reversal, because as you know, market has been trading in a fifth wave rise here. So this was, if we look at the cycle from actually from a year back, you can see waves 1, 2, and then we have seen an extension with smaller corrective pullbacks within this wave 3. Then this was a wave 4, maybe a triangle, and a final leg to the upside from a triangle is normally a fifth wave within this impulsive sequence, which caused a very strong reversal later, especially after formation of this wedge pattern. Ideally this was maybe even an ending diagonal. So we have seen a nice turn to the downside. Normally this happens after ending diagonal is completed. Also notice that we are now trading or trying to break this trend line support. So I would not be surprised to see even more weakness. There is even room for another 10% drop here. And normally when wedge or ending the diagonal in Elliott wave terms is completed, you will typically see a retracement back to the starting point of this pattern, and this was around $60 per barrel. Also, $60 per barrel is a very important psychological level. So based on very strong bearish momentum that we are seeing right now, we would not be surprised to see prices dropping down there. But of course, be aware of pullbacks. So if crude oil will continue to weaken, then maybe look at some other markets in the FX, like dollar CAD, for example. So if I take a quick look here, you can see that dollar CAD on a weekly chart made only a free wave retracement here. Okay, so it can be again turning to the bullish side, especially if crude oil will make deeper prices, which I expect. So at the same time, we may see a decisive push to the upside here on dollar CAD, which is already testing, threatening this trendline resistance connected from this 2016 highs. Okay, so I would not be surprised to see crude oil moving to the downside and dollar CAD at the same time to the upside. Okay. Also, dollar NOK could be in a similar situation here. We have seen a nice healthy pullback on a weekly chart, but this appears to be in a corrective fashion, so I'm expecting more upside here, and this is matching actually perfectly with crude oil. Also, we have to consider that this dollar NOK, dollar CAD were looking and holding support quite well despite very strong crude oil that we have seen over the last few months. So now when crude oil is coming to the downside, I think that this market could easily break even higher. Now let's take a look on the final market today, which will be the S&P 500. So there's a lot of sentiment that I see out there that stocks are going back to the upside, back to new all-time highs on the S&P 500. But technically speaking, I'm still very careful with this bullish outlook. Okay, and I will show you why. First thing is that we have seen a very strong drop in February, and normally after such a strong drop you will see that price action will slow down, and typically this will happen in wave B. Okay, so what I see is that even this leg up is much slower compared to this first recovery. So I think that this is not start of any bullish rise yet, because I don't see confirmation from a momentum point of view, but rather this is probably just a pause within wave B that can be still unfolding and maybe face resistance of the around 2800. Okay, so I'm not bullish on stocks yet. I'm tracking this wave count on the right here, which actually suggests that maybe after all we have completed this fourth wave triangle here. But last week I was interested to see when stocks bounced what 10-year US note did. So actually this turned to the upside from here when stocks, when the mini S&P 500 found a base around 2675. I was wondering what was going on 10-year US note, and I will show you that actually this bounce, this recovery that we are seeing right now actually came after 10-year US note moved lower here into this pullback. Okay, and normally when I'm tracking two different markets that have some positive or negative correlation, I will trust more to the market that has a clearer pattern. And 10-year US note, from my point of view, has a much clearer pattern. What I see here, okay, what I see here is that market on the daily chart completed a 5-wave decline from September highs. Okay, this is a 5-wave decline, and then we have seen a very strong recovery well above this Elliott wave channel, which can be now a very good support here in this wave B. So actually stock market last week moved to the upside when this market, 10-year US note, moved lower into wave B pullback. So the question is, what may happen, what will happen to the stocks if we are going to see more upside on the 10-year US notes? Keep in mind that if this reversal to the upside started on the 10-year US note, then even if this is just a temporary pullback, a correction, you still need 3 waves, A, B, and C waves to the upside. Okay, so I think that we are now in a wave B, and when this wave B bottoms, ideally next week, that's when stocks may find resistance, limited upside. So that's why also here's this hourly chart. You can see nice impulsive rally to the upside. Sorry, it's to our chart, and now you see a 3-wave retracement back into this wave 4 and 61.8% fib level. So I think this is very significant, very important potential bounce zone for next week on the 10-year US note. So at the same time, if this will prove correct, then we may see, as I said, limited upside on the S&P 500. Actually, I can compare it with the S&P 500, and you can see, okay, now here's this. You can see here in orange, this is the S&P 500. You can see a low here on this market, on the S&P 500, exactly when the 10-year US note moved to the downside into this pullback. So if this market, 10-year US note, will see move to the upside, then what we can expect is a turn lower on the S&P 500. So that's why I came out with this wave count on the S&P 500, which is actually still A, B, C formation, and we may see a turn to the downside next week. So I would be very, maybe or 2 weeks. So I would be very careful when market approaches this former swing high here. Okay, but from a trading perspective, what is interesting that there is still room for more upside. Okay, also if we consider this second count, which is after all still a very aggressive bullish look, is also maybe very interesting for long ideas, because even this bearish count has room for more upside. Okay, so maybe we can see more upside early next week, but then, as I said, watch out 10-year US note. If we'll see a bounce, I think that stocks could come under pressure, and actually risk-off mode could also send Japanese yen to the upside or dollar yen to the downside if you want. So actually, I'm also watching dollar yen, what will happen here. What I see is that actually market is turning lower here from this upper side of the range. Okay, so ideally we are now stepping into wave E pullback of this triangle pattern, but really the idea is here that we are in a big consolidation. So I'm trying to stick with the old school technique, which means expecting a move to the downside from the upper side of the range, or move to the upside from the lower side of the range, as long as the market is trading in the range. But for now, what I see is that we are turning possibly to the lower side of the range. So I would not be surprised to see more weakness here on dollar yen. Clearly also because this fall on the 4-hour chart, as you can see, was impulsive, which means that bears are much stronger at the moment. So I am expecting more weakness after this pullback. So I would not be surprised to see more downside here into this wave C next week. So watch out what happens here on 100.10, which I think it's very, very important levels here around the 61.8%. Also, there is a potential head and shoulders formation here that can be forming. So left shoulder, head, right shoulder, this is the neckline. So if we can manage to see a drop back below 108.60, I think there's room for much weaker dollar yen, especially if a risk of sentiment would be seen across different market with 10-year, with higher prices on 10-year US note, and with lower or limited upside on the S&P 500. Okay. Also, what I wanted to highlight is the next, when market moves into the risk-off mode, we may see money flowing into the metals. Okay, so I will take a look on gold S&P ratio. Okay, so this is a very interesting chart actually. So actually what this tells me is that if you see this gold S&P ratio moving to the downside, then it's better to be placed in US stocks rather than gold. But if you see this market is ratio moving to the upside, then gold could obviously doing much better than S&P 500. So what I see here actually is an unfolding 5-wave decline on this ratio, and actually this is sideways price action at the moment. It's not really useful at this stage, but if you are familiar with the Elliott wave patterns, then you know that even if this is a wave 4 consolidation, you still need another leg to the upside, to wave E, before this triangle can be finished. So if we are going to see a turn to the upside from the lower side of the range here on gold S&P ratio, then I think gold can see more upside while stocks can face resistance. So that ABC rally that you said makes sense with this, what I see on gold S&P ratio, especially if we also consider that here on a daily chart of gold, what I see is market sitting on a very important trend line here, okay, connected back from 2016. So maybe this trend line will play out a very important role here and send prices to the upside, okay, at the same time when stocks could turn possibly lower, okay. So watching gold as well very closely. Traders, thank you very much for your attention, and I hope that you enjoyed the video. Bye.